Good afternoon, colleagues. Today, I would like to take you through one of the topics that we covered this semester, financial statements. As you know, that companies are continuously becoming more and more aware of the environment. I was just reading this article from the Wall Street Journal last week on Thursday, which carries a story whereby California has given its large companies that operate within the city up to the 1st of January 2026 produce their climate-related financials. This is in a bid to conscientize the companies so that as they operate within the cities, they need to take cognizance of the environment that they operate in. And according to International Accounting Standard number 1, presentation of financial statements, there are basic financial statements that each and every registered company is required by law to produce at least once every year. What are these basic financial statements? The first one, we have got the statement of comprehensive income. This is the statement that used to be called the profit and loss account. Profit and loss, or the statement of comprehensive income, is meant to measure the performance of an organization in terms of its profitability, whether it's making profit or it's making losses. We also have what we call the statement of financial position. This is what we used to call the balance sheet. The statement of financial position is meant to measure the position of the company at a certain point in time, say as at 31st December 2025. It actually shows the capital that was employed in the business, how it was then employed in terms of acquisition of assets meant to generate revenue within the company. This balance sheet usually, and it should always balance, the assets should always equal capital plus liabilities. We also have what we call the statement of cash flows. The statement of cash flows is very important in business because it shows the cash position of an organization. Apart from what the income statement shows us, the cash flow goes further to refine the net profit that is produced by the statement of comprehensive income, eliminate those items that do not involve actual movement of cash. And this will always show almost the balance that is reflected on our bank statement. Thirdly, we have got what we call the statement of changes in equity. This financial statement is meant to reflect the position of the investors or owners of the company, showing whether the business or their investment in the business is producing results in terms of revenue that will then culminate in their dividends or the growth of their investments in the business. Then lastly, we have got what we call notes to the financial statements. Notes to the financial statements show